Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Dennis Dick, and we have a special guest on the line, Paul LaMonica. He's a digital correspondent at CNNMoney. Paul, how you doing today?
I'm good, thanks. How you guys doing?
Doing good. Digital correspondent. So that just means you cover all the social media. Why don't you explain your role at CNN Money?
Yeah, I write about kind of trends in the market, economy, technology. I do a lot of social media, stock tweets and Twitter. A daily video, a decent amount of TV. So it's kind of a catch-all phrase for all that.
When are you on TV? What time?
Sometimes I'm on. It's not a regular thing. But CNNI, CNN, a couple of other
Okay.
things that I do. I actually do a daily hit in Australia, of all places, about the market. It's just kind of fun.
We'll keep an eye out for that. Well, first let's just talk a little macro here. The much anticipated move by the ECB has come to fruition. Really helped out the markets. Draghi got his way. Any comments on the move by the ECB?
Yeah, I think it seems safe to say that the market was pleasantly surprised. You had that trial balloon, a couple of days ago. I guess on Wednesday, the initial stories coming out suggesting that it was going to be 50 billion euros worth of QE a month, and it turned out to be 60. So I think that investors were definitely happy to see that QE, to use a Seinfeldism, is real and spectacular. So I think that's something that is helping boost investor confidence. But really, what it comes down to is that Europe's economy is such a mess right now, and they need more than just monetary stimulus. It's the same thing like what we had in the U.S. I mean, there's only so much that the Federal Reserve can do when you have a Congress and president that are constantly bickering, and you take what is in the U.S., a very politically charged atmosphere, and you multiply that by the number of different nations that you have in Europe. I think people are happy that Mario Draghi really did what he could, fired the bazooka that Hank Paulson first talked about in 2008 during the big financial crisis. But unless the actual individual governments can come up with structural reforms, and many nations, Greece in particular, and we're going to have Greek elections this weekend, unless you have changes that can really help get the economies of those respective nations back on track, I don't think QE does anything more than just maybe help the financial markets with liquidity, but it may not help the macroeconomic picture there.
And how did they get the Germans? There was a lot of talk that the Germans were not going to permit this. How did Draghi get around that?
I think from everything I've been reading, and our international team in London has been reporting, it really sounds as if the most recent consumer price numbers were a big kind of changing point, turning point, if you will. I mean, the fact that deflation really is a legitimate concern in Europe, I think, is shocking, and Germany can't ignore that. So even though, in some respects, Germany has this hardline stance, and it's understandable, their economy has been typically healthier than many of the other members of the Eurozone, particularly the ones in the periphery like Greece and Spain, Portugal, Italy, etc. You can understand why they would be resistant to doing more bailouts or anything that might hurt their economy. But Germany is part of a wider Eurozone. I mean, unless Germany wanted to go it alone, which of course they would not do, I think Germany realizes that they have to just try and compromise here. And I think that's one of the reasons why you probably got Germany acquiescing and not getting in the way of quantitative easing.
What are your thoughts here on oil? Like, we've seen this impact the Canadian economy somewhat. They lowered interest rates trying to protect themselves against it. Obviously, it's hurt Russia over there too. How does that impact Europe oil? Isn't this kind of maybe good for oil overall? Because I know gas prices are crazy over there in Europe.
Yeah, I mean, the hope, I think, that a lot of people have is that lower oil prices are going to be a boost for consumer spending, not just in the U.S., but Europe and, many other nations as well. Clearly, what I think everyone is still trying to figure out is that the huge plunge in oil, is it really more a case of demand plunging pretty precipitously, or is it more a case of there being a supply glut because of what's going on with the OPEC nations, particularly Saudi Arabia, and everyone's obviously going to be watching what happens, with Saudi output now that you have the change in leadership with the king passing away yesterday, and then the shale gas boom in the U.S. There is that kind of game of chicken, if you will, that someone may need to blink at some point and stop producing as much oil in order to get prices maybe to stabilize.
Okay, let's move on to some individual issues. And the rumor mill is rampant here. Samsung and Blackberry. Is that something you've been covering?
Yes, I wrote about it yesterday. Samsung would not comment on latest rumors. Didn't hear back from Blackberry, but Blackberry has said as recently as last week that they were not engaged in any talks with Samsung. But maybe it's just wishful thinking. Investors still seem to be looking at this as a deal that they want to happen, and the stock really rallied pretty sharply yesterday as a result. I can understand in some respects why BlackBerry could be appealing and why everyone thinks and wants them to be sold. I mean, their revenue still following their market share. John Chen has done a good job of trying to shift the strategic focus, and everyone remembers what he did with Sybase, turning them around, selling them to SAP. But Samsung is not a healthy company right now either. I mean, it has had its problems in its smartphone business, and I'm not so sure that buying BlackBerry is the answer. Particularly, not sure what they would be wanting to acquire. If it's the patents, that might be interesting. But I'm still not sold on the notion that Samsung is definitely going to do a deal here.
Aren't most shareholders that are in there on BlackBerry just banking on somebody eventually acquiring them? Isn't that kind of the whole reason to be in the stock right now?
I think that used to be the case pre-Chen, but honestly, I think that what Chen has been... Was that?
I would say, you think they're turning the company around?
I mean, it's a slow turnaround. It's going to take a long period of time, and a lot of investors may run out of patience. But, I think some of the steps that Chen has been taking are, pretty smart and pretty savvy, particularly what they've done to really embrace the notion and accept the reality that many people use iPhones and Android phones. I mean, they bought a startup last year that allows you to run, a business and personal smartphone accounts, separate accounts on one device, and it works not just with BlackBerry but with iOS and Android. I think the old regime, the founders and long-timers at BlackBerry really had that attitude that BlackBerry was this silo and that you wouldn't cooperate, you wouldn't have any acknowledgement of the other operating systems out there because they wanted everyone on BlackBerry, and I think Chen realizes that's not the case. And then QNX, their software that's being used for their Internet of Things initiative, Project Ion, they're calling it. That has some potential as well. I mean, connected cars are definitely something I think that could be a big business for them. They did get a nice win, long rumored, replacing Microsoft, as the technology that'll power the new Sync from Ford. So there's potential there, but again, you can't make any mistake and think that there's going to be a turnaround overnight. I think he's just stabilized the company, which is admirable because, at this time, year and a half ago, people were talking about the possibility of bankruptcy and running out of cash, and I think that's sort of off the table now.
A couple other stocks that reported earnings here today, General Electric and McDonald's. And McDonald's has been disappointing for a number of quarters here. The earnings weren't great here today, but the stock's trading higher. What are your thoughts here on McDonald's? Do you cover this one?
Yeah, I'm literally trying to write about it. A little bit of multitasking, looking at their numbers, and going to be writing a story. Did a video on that already. I think maybe you might have a case of McDonald's. Maybe the expectations were that the numbers would be even worse. The stock isn't up that much. It's up about 1% pre-market, which is better than declining, obviously. But the company faces so many challenges. Not just the reputation that that is not a very good one lately, both from the standpoint of all the fast food worker protests as well as the quality of the food and things of that nature. There's just a lot of competition, and not just from Wendy's and Yum Brands and Burger King. I mean, you have all these upstarts in the fast casual area, burger joints like Shake Shack, which is going public this week, and then Chipotle, which has really come to dominate this fast casual craze in the restaurant business, and ironically enough, that's a spin-off of McDonald's. So, McDonald's might have been a lot different company if they had not let go of Chipotle. couple of years ago.
What about the General Electric report? They just reported 56 cents versus 55 cents. A slight beat. The stock was trading higher for the majority of the pre-market session, but just in the last 20 minutes or so, it's actually turned red here now. What are your thoughts on GE?
Yeah, I'm seeing it down slightly. I mean, GE, the only surprise with GE is when they don't beat by a penny. I mean, granted, they've had some times where they've just met, but pretty reliably in both the Jack Welch and now Jeff Immelt area. This is a company that you kind of come to expect to beat. What's interesting about GE is it doesn't seem to be the bellwether that it once was, and I'm not sure if part of it is because getting rid of NBC. It's not the media darling that it used to be. But it's a company that is clearly really tied to the economy. They have been making a lot of moves to try and maybe simplify the story, spinning off their credit card unit last year. Definitely one of the main concerns and problems that GE had in the past couple of years was that it looked more like a bank than an industrial. And we all know in the financial crisis how hard they got hit because of some of the issues with GE Capital. So I think Immelt is making the right and necessary moves to focus on the actual industrial parts of the business. And they'll probably never get rid of that GE name because it has such cachet. But I mean, GE is really more about transportation infrastructure and healthcare and things of that nature than light bulbs up.
Oh, I was just gonna say the old GE, we bring good things to light. I just wanted to touch on real quickly with you, the move by the Swiss last week, ahead of the move by Draghi, caught a lot of retail traders, on low margin caught. I mean, do you see this as like just a one-off thing that now these companies are going to tighten the belt and you don't see that happening again, or do you think that that we're susceptible to it happening again?
These are really interesting times right now for Europe, and I think that what the Swiss did was clearly a major surprise. Anyone that had an account or was invested in FXCM, knows firsthand that currency trading is not as staid and safe as they once thought it was. I would like to think that this is a one-off. I mean, it seems like this really was a reaction, a preemptive strike before quantitative easing from the ECB. So I'm not so sure you're going to see any other moves this dramatic. But having said that, we now know that central banks around the world are, they have to act within their own best interests, and you will see moves that may be surprising that take place because these are necessary decisions that have to be made to protect their own currency. I mean, again, I don't think you're going to see something as dramatic as what the Swiss central bank did with the franc, but the Swiss National Bank. But you can't rule out anything, I think, at this point.
And final thoughts just on the markets here. Just keep bouncing off the lows every time we get under 2,000. Now coming back up to the highs. Just any closing thoughts on the market?
The thing that continues to astonish me is that every time we have a big-ish pullback, and they're not even that big in the grand scheme of things because they're from all-time highs on the Dow and the S&P. It seems like 4 and 5% people start freaking out and thinking that that's a correction when the real correction is 10%. So I'm still waiting for something, and I'm not sure what it's going to be and when it's going to happen, obviously, but you would have to think at some point we need a little bit more pain in the stock market to kind of refresh things and maybe get out some of the speculative froth that you have in some individual stocks and maybe in the broader market. But give Wall Street credit or not credit, because this could be a bad thing. We just don't ever seem to get that full-blown 10% correction that people have been talking about that we've needed since for more than 3 years now.
Okay, Paul LaMonica, digital correspondent at CNNMoney, joining us here in Benzinga's pre-market prep. Thanks a lot, Paul. Always enjoy speaking to you, and have you on again soon.
Thanks a lot. Appreciate it.
Thanks, Paul.